Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where we're looking for a running flat 335 corrective structure where the low of C did not take the low of wave A. Now this is extremely rare because a running flat, meaning the low of C doesn't take the low of A, is the rarest flat pattern of the three. An expanded flat is the most common one where B goes above the start of A and C goes far below the low of A. Then we have a regular flat in a 335 where also C goes below A. However, it's more of a ranging structure, and then you have a running flat, which is this over here, where C does not take the low of A. And based on this being a running flat, the probabilities are not high for this to be the correct scenario, because in general, it's such a rare corrective structure. Now over here, this is another flat pattern, and then a zigzag in A, flat in B, and a 5-wave structure in wave C. Now you can see that over here, wave C went below the low of wave A, reaching the most common target area for a wave C as well, so that is nice. The problem here, however, is this wave B, because based on the newest rules of Elliott Wave International, having a flat B in a bigger ABC flat is extremely rare and therefore also not looking great for the bullish scenario, meaning that this is the low and we are looking for new highs. It's very important to flip 29K over here, reaching 29K, flip it for upside, preferably with bullish CVD divergences, because if we zoom in to this structure over here, of course, from the low, we want to see impulsive structures to the upside, but it's not looking too great. If we go to the 4-hour, and we start with the diagonal, then if we follow the official rules of a diagonal, wave 3 is not allowed to be longer than wave 1, talking about a contracting diagonal, and wave 5 is not allowed to be longer than wave 3. The problem here is, however, wave 3 literally wicked into the 1-to-1 taken from the low to the high of 1 to the low of 2, meaning this wave 3 is longer than wave 1. However, an expanding diagonal is very, very rare, and therefore that one is also not preferred. So a contracting diagonal officially is invalidated, but an expanding diagonal is very rare and therefore not preferred. Now, what is also a little bit of a problem for this scenario at the moment is this red triangle over here. Based on the probabilities, very, very locally, the probabilities are a bit higher to move to the downside to take the double bottom that price left over here. Now, Bybit already took the double bottom, or at least Bybit took this low over here, but on my chart, this low has not been taken, as well as on many other charts. Probabilities more locally, based on the structures we are forming, are higher to see a bit of a ranging move towards the downside, but you can see you don't want to see the trend line of the channel be hit, because then also a contracting diagonal is going to be invalidated, which means based on where price is at the moment, price can only now reach this area of the triangle and not hit the lower trend line of the channel, which of course has very low probabilities, besides then also wave 3 already hitting the 1-to-1, not looking good for the diagonal. But in a double 1-2, we have the same problem. In a double 1-2, 1-2, 1-2, the second wave 1 is a lower degree wave 1. The green count is a higher degree count. But in a lower degree wave 1 and a lower degree wave 2, you want these waves to be shorter in price and time than the higher degree wave 1 and wave 2. But this second wave 1 over here is actually longer in price as it hit that 1-to-1 than the first higher degree wave 1, which is not what you want. And also, if we are looking at this wave 2 over here and we're looking for price to still make a bit of a turn to the downside, then this 1-to-1 comes into play, because this 1-to-1, like fib time over here, is taken from the high of 1 to the low of 2 and then put it on the high of this one to compare the higher degree wave 2 with the lower degree wave 2. So if the low of this wave 2 is not yet in and we still have a move to the downside to come, this over here is going to be a longer wave 2 than the higher degree wave 2, which makes it very, very, like this scenario, not high probabilities, like low probabilities. And also, if we think about a regular impulse, 1, 2, 3, 4, 5, we do have overlap between the high of 1 and the low of 4, which is also not what you want to see in a regular impulse. That's an invalidation. So it's not looking too great at the moment. Now, if we then go to the medium time frame bearish scenario, we are looking over here for an ABC to the downside. So we have 5 waves in A, 3 waves in B, and then 5 waves to the downside in wave C, where the double bottom over here at 24.7k is going to be taken. Now, Bybit already with a big wick over here to 23.6k has hit this low or took this low, but based on probabilities, it is high that Bybit will eventually fill the wick, meaning that other charts will also follow towards the downside. Also, the fact that Bybit wicked this low increases the probabilities that other charts will follow. But as you can see on my Coinbase chart, this low did not yet take the low. This low over here is still clean on my chart. However, probabilities are not on the side for reaching new highs. Probabilities are on the side for this low over here to be taken, just like Bybit has already done. Now, in the bearish scenario, we are looking over here for a 3-wave structure to the upside. Now, of course, as the bullish scenarios locally here are very difficult to be valid, like high probability scenarios on the bullish side are not really the case, it increases the probabilities automatically for this move to be more of a bearish structure to the upside. And one of the scenarios I'm looking at over here is a WXY, where W is then a flat, X a double zigzag, and in Y we could have a zigzag over here, where then we can expect price to move to the downside a little bit before another push to the upside, reaching the 29.2k areas over here, where we do have resistance, as you can see, between 29.1, 29.4, for then a move towards the downside. So we have a flat X zigzag. That's exactly what you like to see, and then a double combo scenario where the target area for wave Y is between the 1-to-1 and the 1.618. So this area over here is still perfectly fine. That does mean that more locally over here, it would be good for price to move to the downside at least a little bit more, because in wave Y, if we're looking for a zigzag, we're looking for an A, B, and eventually a C to the upside. Now, as mentioned, we do have a double bottom over here acting as a magnet for price, that's for sure. And just below the double bottom, we over here have a support area, also thanks to Bert P in the live stream earlier today, 26.8k to 27k. So this is an interesting area of interest for maybe then a bounce and a move to the upside. If this doesn't hold, I'll be looking for this target box over here to the downside, sitting between 26.2k and 26.3k for then potentially that bounce to the upside, reaching 29.2k. If we then zoom in to this range over here, then this is currently what I am looking for. This is one of the scenarios that is looking quite nice. So we were expecting a move towards the upside for the daily naked point of control to be hit over here at 28.3k. Very, very nice indeed. For now, a little bit of a rejection. Now, what you're looking at is a sideways ranging structure where this move to the downside is a 3-wave zigzag, which looks like this. So we have an A, B, and then a diagonal C over here for then more corrective structures. But because this is or highest probability, at least a 3-wave structure to the downside, it increases the probabilities that at least this high will be taken. Because if we on the medium time frame are looking for an ABC, this wave C is an impulse, meaning that from the high of a potential B, you want to see impulsive structures to the downside, meaning 1, 2, 3, 4, 5, or you want to see some sort of a diagonal structure. However, a 3-wave move like we had over here is not great for the start of a move to the downside. At least this could have been the first zigzag of a wave 1, 2, 3, 4, 5, but that is not what we got. So that increases the probabilities of price still taking this high. However, if we then zoom in to this structure over here, and I let this take this scenario on my chart again, then over here, WXY, and inside this X of B, we are then looking for a 3-wave structure to the upside in a WXY, inside of X or B for then a move to the downside again. So here we have a zigzag, X being a flat, and then another flat in wave Y. And the reason I'm thinking about a flat over here is mainly because this move is so short. If this would have been a zigzag in the bullish scenario, where this is then X and you look for Y being a zigzag, wave C is very short. It did not hit the common target area for wave C in a zigzag. Besides, if W is a zigzag and you have X, Y in a double combo is not allowed to be a zigzag as well. So that's a bit of a problem. So that is why in this particular scenario, I'm looking for this to be a WXY over here, where the high of X or B is then already in, looking for a move down. But as mentioned also yesterday, looking for a bit of a range over here to then maybe eventually wick the highs and a move down, because in a sideways double combo, if W is a zigzag, Y preferably is a triangle or a flat. Well, triangle at the moment doesn't look too probable yet, and we have a very, very little price action so far for a triangle as well. And the flat is an A, B, C, which is a 3, 3 and then a 5, where you are going to take this high before then moving to the downside to take the double bottom and then eventually reverse to the upside once again to take this high. Now if you then look at the probabilities of the different scenarios, then basically on all the time frames as it stands, the probabilities are higher for price to still find more downside on the medium time frame, also on the low time frame. And I want to highlight again that we do then expect at least one more push to the upside. 29.2 is very interesting, but then a move to the downside. And on the micro over here, the highest probability is for price to continue ranging over here and at least have another look at the double bottom over here. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.